Hello and welcome to the Utopia Concepts LLC YouTube channel. Our mission is to be a centralized resource and directory for the building blocks to financial freedom. We promote and support the financial freedom community. In today's video, we'll discuss velocity banking and why it's the ultimate debt reduction strategy. Velocity banking is a debt tool that contradicts everything we have been taught about banking. When looking for an example of what works when it comes to financial success, it's great to look at what wealthy people do with their money and financial strategy. When wealthy people need to make a purchase or have an unexpected expense, many of them use lines of credit and don't use cash. Rising inflation, 8.6% as of June 2022, has caused the buying power of the dollar to be devalued. Cash is dead and cash flow is king. Velocity banking is used to maximize cash flow and to have leverage. Typical consumer debt loans are not liquid. Banks usually get all of the leverage and they use other people's money to grow and profit. The banking industry was set up to only benefit the bank and not the everyday average person. If you are living paycheck to paycheck and sometimes struggle financially, then the velocity banking strategy would be a good debt tool to use. Velocity banking allows one to leverage the bank's money to pay off debt without the need to necessarily increase your income. Velocity banking allows a continuous revolving cash flow that is liquid with simple interest. This debt tool is contrary to the average consumer loan debt that is front-loaded and amortized. Velocity banking allows you to use the tools you may already have. Home equity line of credit, personal line of credit, and even some credit cards can be utilized as a debt tool in velocity banking. Velocity banking allows one to accelerate and leverage cash flow, provided that the correct steps are applied. You can pay off debt with simple interest and also make chunk payments to pay off your mortgage faster. It is recommended to use this strategy to pay off debt and to maximize cash flow. You can also use this to buy assets that will compound and grow your wealth. It is not recommended to use this strategy to buy liabilities, which weigh down your net worth and your ability to become financially free. Here's a step-by-step velocity banking strategy. 1. Get a revolving, open-ended line of credit, a HELOC or a PLOC. 2. Deposit entire income into HELOC or PLOC. 3. Pay all expenses via HELOC or PLOC. And 4. Rinse and repeat. This method allows a debt principal to be paid down in a relatively short period of time. This creates liquid revolving cash flow with leverage. The velocity banking strategy can also be used with credit cards. The same concept of using your line of credit as your own little bank applies. This is also effective as long as the credit card is revolving and open-ended and your income is deposited on a regular basis. A quick disclaimer though, the velocity banking strategy is for individuals who consistently follow the recommended strategy of depositing their income into their line of credit or credit card. The velocity only works as a continuous cash flow as long as it is fed with consistent income. Having a plan before, during, and after velocity banking is highly recommended. Please let us know if you have any velocity banking questions in the comments section below. Don't forget to like, subscribe, and share this video with a friend or a family member who could benefit from it. Thanks again for watching, and we'll see you in the next video.